Hey guys, Akil Stokes here, retail trader and trading coach over at tier1trading.com. Welcome back to another weekend trading edge video where I show you what's on my radar for the week ahead. Let's hop into it. So here on a New Zealand dollar, like most pairs in the market, we ended the week in a big way. A lot of bearish momentum here as we saw dollar strength after our Fed Chair Jerome Powell's Jackson Hole speech. And the question is, what is next with this pair? And this has been an interesting pair because we've done a few things, right? We set up a head and shoulders pattern to the upside, which you can see right here. That broke out right into a bearish cipher, if you guys remember this from a few weeks ago. And now we're slamming back down and ended the week with a lower low, lower close below this little period of consolidation. And the question is, can we go lower? My answer is yes. Now we are at the start of a rejection zone right here. You can see this pin bar right here shows an area where previous buying pressure existed. So there was some buying interest down there. But I do think we can go and test that level. And that's going to open up an opportunity throughout the week. You see, the level that I think we can test is going to be the 61 even handles. If I take my horizontal line tool and I put it right down here to 61 even, you can see it's right in the middle of this swing point right here and still a fair way away from where we're at, right? We're currently trading at 61.34. We're at 61 even. However, what I would expect, and this is based off action on the hourly, you can see how momentum has started to, really slope a little bit. And that's a combination of two things. One, you're going to see that after every massive move in the market, right? We had a big red candle here. We followed it up with another one. That's going to happen, right? Eventually, sellers are going to take profit. There's going to be less selling interest as well as the price gets more expensive. Two, it's also a Friday, right? Fridays typically aren't big days for trading. Obviously, this Friday was a little bit different with the news coming out. But usually, the end of Friday, people are getting positions off the table as they don't want to hold them over the weekend. But what we may see as the new week begins is a little bit of relief. And what I mean by relief is meaning a little bit of a pullback. So we may see price push right back up into our previous level of structure resistance, previous support, now expecting to act as resistance. You can see these levels right here that we broke. And if we do that, that just opens up more opportunity for our potential move to the downside. Sorry about that, I'm having trouble wiggling the charts. So if we get a pullback anywhere, right, we're going to have to wait and see and view price action to kind of use our tools and our analysis skills to know when prices are likely to reverse. But if we can reverse a little bit or retrace a little bit, I should say, that's just going to open up more opportunity to extend to the downside to that 61 even handle. And I'll tell you what, just eyeballing it, it looks like if this is the point of retracement, that 61 even handle may be a 127. Yep, look at that, right on it, 61.06. So nice confluence there as well. So looking for a potential pullback trade on New Zealand dollar short with a move eventually down to 61 even or right above that level, 61.06s. Next, we're going to head over to Euro Aussie. We're going to start here on a daily. And Euro Aussie is a very interesting one because, well, like many pairs in the market over the last few months, due to the fundamental movements that we've seen, we're getting a lot of mixed signals here. Now, on Thursday, you can see that we had a break and close below a key level of structure, right? Look left, structure leaves clues, which allowed us to make a bearish prediction. We were actually looking for a bearish continuation pattern. Friday came, again, we got news from the US, we got some news from the ECB as well. And you can see as a result of that, right, we've got really the market pushing up and engulfing our previous day. And when I see something like that, I see it as a false breakout, which means I should ignore the previous breakout that happened before. So that lower low, lower close that we spoke about does not exist. Now, again, I told you this was confusing. With that being said, I am still looking for potential shorts because if we go down to the daily, you're going to see that we're coming into a pretty key decision point, right? We can see that price action is coming to its previous swing, meaning that price action pushed down here, retraced, and then put in that lower low, lower close. If we look a little bit closer at that retracement, we have some pretty good clues in the form of how our candlesticks forms, right? We can see our long wicked candles up here, another long wicked candle up here, a nice area of selling pressure as the buyers tried to push it back and really failed to do so. Well, we ended the week with a high momentum candle right into that area. We were not able to pass it. And then we followed it up with a doji candle. I believe this is going to be an inside bar as well. I didn't double check. We may be right above it. Let me just see real quick. Excuse me, guys. Our highs here are 144.66. Our highs here are 144.67. Okay, so not an inside bar, but a doji candle nonetheless, which tells us indecision. And I love getting indecision at a decision point. And again, decision points are areas, key levels of structure where price is going to tell us one thing or the other. If we hold price, we're going to continue lower. If we violate price, we're likely to continue higher. Now, for you guys that are on the premium membership over at Tier 1 Trading, go back and watch Monday's Q&A session. We had a great question come in about structure, which structure to pay attention to, which one to ignore, because we had a trader that was basically looking to get some clarity on how to determine what structural levels are valid, which are invalid, because he had kind of confusion about looking at every one or ignoring different ones, and it was a really good Q&A clearing up that. So go back to the Monday session again. That was this past Monday. That would have been August, August 22nd, if you're watching this late. And view that training session. Really, really good here. But this is one of those key levels because it is a decision point. If we violate to the upside, then our trading opportunity is looking for a continuation up 145.70s, just kind of eyeballing it right now. If we violate or if we hold and we push to the downside, right, I think we can come back to retest this level right here, 143.65. That would line up with a left shoulder. That'd be your most conservative place to take targets, especially because this could end up being a head and shoulders pattern as well. And of course, a more aggressive level is a retest of lows here down at 142.81. So keep an eye on this level. Again, 1 hour chart, you're going to see some loss of momentum. We just talked about that. It means a little bit less on Fridays because we know what Fridays are. But watch this level for potential reversals. Bigger picture, I don't think this will happen before next week's video, but it could as well. We could have a potential head and shoulders pattern as well. So if we do retrace down here, that would give us a symmetrical shoulder. That would give us a left shoulder. That would give us a head. That would give us a right shoulder, which can also set us up for a potential move higher as well. Pound Swiss is next. This is another pair that I often don't visit as I stay away from the Swiss pairs, but not a lot of options this week in the market. And this one is a pretty tasty one. Again, looking at price action, understanding how to read a price chart, looking at the clues that price has left us. I think when looking at this chart, we can all say that we are coming into a previous level of structure, a pretty significant previous level of structure. Just as we spoke about clues in the last one, look at the clues that the market leaves us down here, right? With these wicks, buying pressure, buying pressure, buying pressure, buying pressure, and an eventual explosion up. This is an area that the market once found to be important before, and typically those same areas are found to be important again. Now, that doesn't mean that they're going to hold, right? It's always a new battle, a new match every time, these two opponents play, talking about the Bulls versus the Bears. But we at least know there's going to be some type of conflict there, and that's going to offer us opportunities. So the opportunity that I would be looking for here is going to be a buying opportunity simply because, well, until this level of structure is violated, I'm going to expect that it holds. And just like the last pair, we got to dive in a little bit deeper to find an exact location because our range is pretty big. But if we look closely, and maybe a 1 hour make it more clear, we have an advanced pattern setting up here as well, right? If we look at price doing this, give me a second, I'm going to draw I'll just do this and shortcut it real quick. I'm used to being my other on NinjaTrader where I have my pattern recognition software. I can just click a button and it shows up. But we're looking at this. We're looking at an X to A right here. Going to be our starting point for our potential advanced pattern formation. Our first retracement is going to be our A to B. This next retracement up here is going to be our B to C. And then our D completion for this potential bullish Gartley is going to be right down here at our 127 Fibonacci extension, taken from the A leg to the B leg. And that's going to put us right at 113.18. And of course, that's going to be a zone, right? So if you're aggressive, you're entering right away. But the zone is going to be from that part all the way down to the X leg. And of course, right, we do have these underlapping levels of structure. So make sure stops, I don't see any reason your stops would be above that level of structure. But if for some reason you're trying to get cute, make sure stops are beyond this level of structure. So below these lows here at 112 12.98, especially being so close to the 113 even handle. Now, the cool thing about this, and I'm not saying to do this, but this follows up on the conversation we had. When was the YouTube video? We did one of the live streams. We talked about aggressive C's. I'll find it in the post editing and kind of put it up for you guys. But we did a good lesson during one of our live trading sessions, one of the actual live stream sessions that we shared here on YouTube about the aggressive C and how it's a strategy that will kill most traders. And we talked about how to do it in the right way. Well, if we look at the reverse side of this, right, we have another pattern formation setting up as well, maybe even two, but we'll stick to this one first, right? You can see we have an X to A here. Oop, wrong tool, there we go. We have an X to A right here. An A to B that comes into our 50% Fibonacci retracement level. We then would have a B to C, right, with the completion of this pattern down here. So the completion of that bullish Gartley, would actually be the C leg of a potential bat pattern, right? Now, again, you don't want to just take this just to take this. You don't want to just stop and reverse just to stop and reverse. You never want to shoot for targets that you don't actually think are going to be hit. That's what gets a lot of people in trouble, where they'll see this and they'll be like, oh, Keel, such a juicy opportunity, and I'm going to shoot for targets up here, when there's no real reason they think targets will get there, aside from the fact that a pattern could potentially complete. Then you leave a lot of money on the table because you should have had all of this. But yeah, anyway, long story short, I would advise not shooting for extended targets here unless your analysis tells you that you're expecting continued bullish movement. So just be careful with these. Again, in the video we did during the week, we talked about how the aggressive C is one of the worst strategies out there, and you should not do it because it will most likely cause you to go broke. But there is a smart way to do it, which can be very beneficial if you're able to do it consistently and in the right way. Aussie Swiss is next. We're going to be here on the 4 hour. This is short and sweet. We're coming down into a previous level of structure. Again, learn how to read a price chart. Take time to measure out the ebbs and flows wherever you have these different swings, these pivot points. These are going to be key levels of structure that you should pay attention to. When you add that to the knowledge of understanding candlestick stories, right? The wicks right here, the engulfment right here, and the continuation there, you'll get pretty darn good at identifying key levels of structure. Remember, the prediction process, in my opinion, is the most important part of trading. If you can, the number one thing in trading is that you have to be able to make a good prediction. If you can make a good prediction, more than half the battle is done. Now, the rest of it is timing and location and understanding how to get in, developing rules. But in comparison to just being able to make a prediction of what price or where price action is likely to go and when is it likely to do it, right? The direction and timing. The rules part is going to be the easy part because there's so many ways you can get involved. So as a newer trader, if there's one thing you should focus on at first, it's just reading a price chart, understanding how to make predictions, working on that skill of anticipating where is the market likely to go, and if blank or blank happens at this level, where are we likely to go next? Then you can add on after that, right? So nice level to look for, a potential reversal at. We can go down to a lower time frame, an hourly chart. You can see the slow of momentum, loss of momentum here. But again, the two main reasons for that, high momentum move to the downside is one, end of weekend or end of week is another one. But start looking for reversal signals down in this area. Again, the end of this area is going to be right about here down at 66.43s, right? So we can do a number of things, right? We can continue to put in kind of a falling channel there. We can go down there. We can double bottom. We can 26.18. Lots of opportunities in this level, but I think this is a good place to look for potential buys and look for a little bit of relief heading into the new week. After all, if the theme of the market lately has been overreaction to news, take some time to actually evaluate the situation and then correct from that overreaction. And, this past weekend or this past Friday, Powell came out and with a lot of tough talk and a lot of stern talk to kind of not scare the markets, but to kind of, dig his feet in and say, hey, this is what we're doing, put out a very clear message. Let's just say everyone's not buying that. So be aware of that as we head into the future and base your analysis off of what you see on the charts and not what you feel in your heart. Ooh, that was good.